Hello everybody and welcome back to FX Street. Today we're going to be taking a look at Dogecoin and what it's been doing, right? Before we actually get into the details of that, I want to direct your attention to the FX Street YouTube channel. If you enjoy the content that we put out, please make sure to hit the subscribe button, and you can also follow us on Twitter at FXS Crypto. And if you like what I do, you can also follow me on Twitter at Mangeko with the 0 at the end, right? Getting back to Dogecoin, right? I'm not sure when I posted this setup, but I think it was probably when the price broke out and retested this local top here at 0.15. I expect the price to head back into this demand zone here, and not only that, we had the support level here at 0.13 roughly, and that was a good place to enter long, and I think that's when I posted this setup here. But unfortunately, I did not trade the setup. Regardless, right, the price retested, not only retested the next resistance level here at 0.16, it managed to close above it. But on 6th April, Bitcoin flash crashed very briefly, which caused a lot of altcoins, including Dogecoin, to crash as well. Right, so far, as you can see here, this demand zone was retested, and now we shift to the next one, which is somewhere around here. If you want to take, if you also want to consider this cluster, it could be something like this. Right, so far the new demand zone has been holding up the price really good, and I expect a slow but a steady uptrend towards the same level here at 0.16. Right now the price hasn't even formed some sort of equal high, but it's breached it's collected liquidity resting above these highs here. Right, so this is done. The liquidity resting above these highs is done. So if we get some sort of a stabilization after flipping this level here, then I'm pretty sure the next target is 0.19, 0.20 is where I would bet my chips on. So if you were to probably market along this position here and stop loss below this, then 0.20 seems like a really good setup, which would give you a 30% upswing and a 2.5 hour trade. Right, but then again, right, you see altcoins, you see shit coins like Dogecoin and Shiba Inu like rally extremely quickly during the start of the bull runs and during the peak of the bull run. That's when you kind of understand that the cycle is started or the cycle is coming to an end, right? Because that's when, yeah, I think the trend that I've noticed is that the price of these meme coins tend to rally quite a bit at the start of the bull run and at the end of the bull run. So not having exposure to Doge or Shiba Inu or any other popular meme coins is not a good idea. It's not a bad idea. So my point is that you should have some sort of exposure to meme coins like this, because they yield really good returns after consolidation for a very long time. As you can see here, Doge consolidated for roughly 2 months here before it actually exploded. And once it did explode, it was a 600% upswing. And beyond that, it rallied another 200%. So in total, this was 1,000% upswing in just a month. Wow. So yeah, I think not having exposure to meme coins is a no-brainer. So yeah, that pretty much sums up my analysis for Dogecoin, which indicates that the upside for Doge is capped at 0.20. As for the downside, you don't want to see it produce a daily candlestick close below 0.13, which is like the current support level. If it does, then you can expect the price to head down to 0.11. So yeah, that's it. If you enjoyed this session of technical analysis, please make sure to like, comment, and subscribe.